Hello guys, welcome to my channel MRS Trade, and I am Emmanuel Odogwu. So on this video we just want to create an analysis video for the phone users. Okay, a very simple strategy that you can use to make money for yourself, and trust me, it's a strategy that I've been using, and of course I want to share it with you. Okay, it's because I want all my followers and of course all my clients and students to also be making money just the way I'm making money. All right then. So I'll just go straight to the video, to the analysis, so that we don't make this video too long. Okay. I want to believe you're seeing my screen, right? Okay, this is MT4. You can also use this strategy on MT5, so just pretty much the same thing. Now, this area is called the market watch. I'm sure you know. Of course, I'm sure you also know that you already have knowledge of the basics around MT4 and MT5 platform. I mean, this area is market watch. Of course, this area is called the chart. Of course, this other area is called the trade uh the trade terminal, where you can see all your trade, and of course this account history. Okay, so back to this market watch. Let's open a chart. Let's start by opening a chart. So I'll just click on maybe any of these. So let me just do USDJPY open chart. So the chart is open right now. So as you can see, this is a plain chart. So I want to start from the point of deploying the tools, right? You know, in trading, of course, in every discipline, we have tools. We have tools. It is tools that make the job easy, right? You know, in every discipline, there are tools. Okay, it's tools that make the job easy. So I have a plain chart here. I'll deploy the tools so that you can see the way I'm deploying the tools, okay? So that you can do the same thing, deploy the tools, right? And of course, apply this strategy on your phone, mobile phone, be it Android or iPhone. You can apply it by yourself. And of course, you can start trading with it and making money for yourself. All right, please, if this is the first time you're joining this channel, you're watching this video on my YouTube channel, please do well to like this video, right? Share the video with your friends, and of course please smash that subscribe button. Please don't spoil your phone. Okay, just click the subscribe button, right? So that anytime I upload a new video, right, you'll be among the first persons to get the video. So quickly, I will deploy the tools. So the tools I'm going to use is the tool that can give us directional signal, right? I mean, a tool that can give us the direction of the market, and that tool is moving average. All right. So moving average is one of the tools, most popular tools in trading, in Forex, that can tell you the direction of the market. And trading is all about knowing the direction, sir. Just knowing the direction and keep trading in that direction, right? Keep trading in that direction. And of course, once you are in good profit, you want to close your trade, okay? You don't want to stay too long on the market, right? Because the market can as well retrace against you, or the market can reverse. So once you're in profit, you take your profits. Once you have hit your target for the day, you're done for the day. That's how successful trading is done. Then, of course, you cut short the losses, right? With your stop losses. Okay, so let's deploy the trading tools right now. Okay, so I'll just go straight to this indicator icon here. So this F here is the indicator icon. So you see the same thing on MT5, right? So I'll just click on it. It opens up like this. As you can see, I don't have any indicator for now. So most of you doing this, you might have just one moving average here. So it's pretty much the same thing. Yeah, it's pretty much the same thing. If you have just one, you can go ahead and edit that one. But right now, I've been able to remove all of the tools so that I can start from scratch for you. Okay, so I'll just click this F plus at the far right of the main chart, right? So this button is add indicator. So I'll just click. Now among all the list of different indicators with their different subheadings, so as you can see, trend. So under trend, the fifth option precisely is moving average. So I'll click moving average, then I'll go ahead and type the settings for it. So I'm using a 50 period moving average, right? 50 period. Then I'm going to use a linear weight, right? Linear weighted moving average, as you can see. Then apply it to close. I mean the closing price, which is the best price, right? That you can apply any of these tools to. Okay. Then of course the color I would like to use, let's say a red, right? Then of course 4 pixels. Just very simple settings here. I'll click done. So I've applied one moving average, right? I've applied one. So we can go back to the chart and check. So this is what I just applied. So the color actually came out as black. Okay, now let's go ahead and use the black. Okay, so the color doesn't really matter much, right? So it's just for you to differentiate the two, right? So I've applied one. This is 50 period moving average here, 50 period. So I'm going to apply the second one. I'll click the F again, then of course F with a plus, then I'm moving average again. So this time around I'm going to use the settings of 21, right? So 21. So the method is going to be exponential, right? Because I want this one to be very fast, and of course follow the price or detect every changes in price very fast. Then the color I would like to use blue. Then I'll click on done. So I have two moving average here. I have two moving average here, as you can see. There are two moving averages here. So now that we have applied these two moving average, so the strategy is very simple. This strategy is called a GAD cross strategy. GAD, G-A-D. It simply means the G is an acronym for golden. The A is an acronym for and, just and, A-N-D. Then of course the D is an acronym for debt. So it's a golden cross strategy and a debt cross strategy. What do I mean by that? Somebody say, Emmanuel, what do you mean by golden cross and debt cross? So golden cross is very simple. Now, whenever you have two moving averages on your screen or more than two moving average, right? So as the price keep moving all over the place, up, down, up, down. So the moving average job is to follow the price in this direction. That's the job of the moving average, is to follow the prices, right? Because the moving average gives you an average movement of the candle of the price. So it's following the price. And of course, trading is all about following the direction of the price, right? So the moving average follows the price to give you the direction, the directional movement the market is going. So if you have two moving average, you notice as the price is moving all over the place, the fast moving average plays, the 21 is the fast moving average. Then of course the 50 period is the slow moving average. So the smaller number is the fast, take note please. Then the bigger number or the larger number is the slow. So whenever the fast crosses above the slow, we call that a golden cross. So this is what I mean by golden cross over here, right? And that can give you a trading opportunity, sir. So as you can see over here, this is USD JPY H4 time frame. As you can see over here, the blue moving average, which is the 21, is below the black moving average, which is the 50, right? So remember, just like I said earlier, the color can be actually any color. It's just for you to identify which of them is 21, I mean the fast, and of course which of them is 50, which is the slow. Okay, so over here is the golden cross. By golden cross, I mean you observe carefully, right? Because this is a business that needs discipline. You observe carefully to see when the fast moving average crosses just above the slow moving average. That's what we call a golden cross. So a golden cross is a trading signal. That trading signal is a buy signal. That means the market is about to start going up, right? So as you can see carefully, this happened on which date? On the 11th of October, right? 2023. So of course now you know that this video is a very recent video, right? So it crosses over above the slow moving average. That's an indication that the market is going up. So what do? You rush in to buy, right? Then of course the opposite is the dead cross. So the dead cross is where the fast moving average crosses just below the slow moving average. It's just the opposite. So we call that a dead cross. A dead cross is a signal, right? It's a market signal that can give you money. And that signal is simply a sell signal. It's a sell signal. So one of the advantage of watching videos like this on YouTube is because maybe if if the content creator or if the instructor is too fast, you can always pause, go back again, play it over and over again, because this kind of knowledge comes by hearing and hearing. Okay, so I don't know if I'm too fast, but then I hope you're following. So once the fast moving average, again, just like a recap, crosses below the slow moving average, that's the opposite of the golden cross. We call that a dead cross. So that's a sell signal. So you want to sell. So if you watch carefully what this market is doing, you will notice all over the place we are seeing both buy signal and sell signal, right? So that's how you trade. So over here is a buy signal. So you can imagine taking a buy trade here and staying on the trade for this long. Come on now. That's how we trade. Of course, if you stay this long, we now call that a swing trader, right? Because then you're staying very long. So this is where the cross happened, 13th of September. So it tarried, or it stayed for a longer time till when? From 13 to 28. That's over 2 weeks, right? Over 2 weeks plus, right? Over 2 weeks plus. So that means you have a buy and you stay on the buy over 2 weeks. So that's making a lot of money. Now, if you watch carefully, after this cross, this golden cross here, you notice the price came deep, right, into below the moving averages. But then the exit signal, when to exit your trade while using this signal, right? If there is no cross for a swing trader, you might want to still stay on the trade. If there is no cross, you might want to still stay on the trade until there is a cross. So you can see this movement downward is a very big retracement downward. But guess what? The moving averages did not cross themselves. So that means it's still telling you that, hey, look here, the price is still going in the same upward direction. So that means this is actually a fake out. So because most persons will be faked out, right? Thinking the market has changed direction, but the moving average is still guiding you, right? So that means this moving average is a guide, right? It guides you through the market into profitability. All right, so it guides you, right? Then of course, then if your trade is still running open, you still be making profit. Even here, when we have this spike here, this dip here, you can see this dip here, right? The moving average is not cross, but see where it actually crosses, right? So it crosses here. So that means this is where your trade should close for a swing trader. But guess what, sir? For an intraday trader, a day trader, you're not going to be using this H4 time frame. You're going to be using a much lower time frame like the H1 time frame, and of course the M30 time frame. But just get the concept. The concept is once there is a cross, then you start taking trade in that direction. Now there are two ways to enter, right? There are two ways to place your trade. So I've just explained the golden cross and the dead cross. Now let me also explain the entry signal. There are two ways to enter. One is an aggressive entry. The other one is a conservative entry. So the aggressive entry is once there is a cross, you just place once there is a cross, right, upward. Once there is a golden cross, right. So just after the close of the bullish candlestick, you can see above that cross, you want to place your buy trade. That's aggressive entry. But I will advise the new traders here to use the conservative entry. The conservative entry simply states that once there's a cross, you don't enter immediately. You wait for the price to retrace, trade back towards the moving average. So you can trade back towards the moving average, just close to any of the moving average, or even touching any of the moving average. Take note, please. Once there's a cross, you don't enter somewhere here. No, you wait for the price to trace back, because anytime the market impulses, because it will take an impulse. An impulse is a strong directional movement in a particular direction. So if the market is heavily going in one direction like that, in the opposite direction, that's when there will be a cross. So whenever there is an impulsive move, the market normally retraces. So it is that retracement we want to finally enter the trade. So once for the conservative entry, I hope you understand. So once there is an impulsive move, right, and then there is a golden cross or a dead cross, so you wait for the conservative entry. Whereas the aggressive guy has already placed his trade, but you wait. The reason is most of the time, up to 60 to 70% of the time, the market will retrace back to the moving average. So once it retraces from here back again towards the moving average, so this here is the best entry, right? Or around this place. So if you enter here, and now when the price is going up, that's when you start basking in profit. So if you enter here, your stop loss will have to be just below the recent low. So the lowest price, or the low before the current market action, or the price action, that is where you set your stop loss. Then of course your take profit can be ×1 or ×2 or ×3 of the stop loss, and of course that's how you make profit. So let me change this to M30 time frame, or even the H1 time frame. Okay, so let's look at let me explain what it is here on this M30 time frame. So this M30 time frame is for the day traders, right? So most of my new traders are day traders, so you want to pay rapt attention here. So from this USD JPY, so this is just 24th of October. I think that's just uh, 2 days ago, right? So there was a cross here. So after this cross, guess what, sir? After this cross, so this is the close of the bullish candlestick after the cross here. So the aggressive guy will enter just here immediately, somewhere around 149.710, right? We'll place a buy somewhere here. And of course, for that aggressive guy, his stop loss have to be somewhere below the moving average here, or below this recent low, because this recent low will be very fast. So you can use the moving average. Okay. So because you have to be very dynamic. So, but this is where you enter your trade for an aggressive guy. But I said for the conservative trader, which I said the new traders should start with that. So once there's a cross, you don't enter immediately, right? So look at all of those impulses. So this is the impulse, right? Then of course wait for retracement. So the market trading back again towards the moving average. So this is where you enter your trade for the conservative guy. Okay, you enter your trade there. So if you place a buy here, right, so that means you're placing a buy when the price is coming close to the moving average or touching the moving average, any of the moving average. And of course, you know the moving average serves as a dynamic support. So that's the support system. And of course, you have to buy the support. So you place a buy here, right, following this golden cross. You place a buy here. So if you're placing buy, your stop loss can be below the black moving average or even below this level. So just look at what happened. If you place a buy here, right, on this day, the 24th of October, on USD JPY M30 time frame. So you can see after placing buy here, the market later moved upward. That would have given you profit. Now, but you see another retracement again back towards the moving average. So it did not get close to your entry. So you're still on profit. Of course, moving back to the moving average, another opportunity to enter another buy. Okay. So if you enter another buy again, so you can see the market later started trading upward and upward and upward and upward. So this is how you use this strategy to place a trade. So what you do is once you have this GAD cross trading system, mobile trading system on your phone, so you just go straight to your market watch, and you open any of the instruments. So you just open them randomly. You click on any one and click open, because while opening them, you want to see if there will be a cross, right? So you can see this cross here, and afterwards see how far this market has moved upward, right? So what you want to do is you want to meet any of them that is just crossing. That is just crossing. So you can see here, there's about to be a cross here, but yet but it has not actually crossed. Okay. So you just keep checking any of them that has crossed. Fantastic. That is where you dive in. That's where you dive in. Okay. So over here on this Euro JPY, so you can see we just had the cross, right? So this is a cross here, right? So after the cross, the market moved upward and it has retraced backward. So this will be a good place for us to do a live practical here. So it has crossed. So this is a golden cross. I mean, the 21 period moving average has crossed above the slope, the 50 period. So that's a golden cross. So of course, don't forget, golden cross, you want to do a buy. So I'll just click on this plus here. Then I'll enter my lot size. Let's say 0.03 there. I'll do a buy. So we have just matched it up with a practical. So I've entered a buy, as you can see. I've entered a buy. Of course, this is where I have my running trade already, right? As you can see, of course, I'm sure you already know this, that the red is on potential negative, the blues are on profit, as you can see. So I've just placed the trade. Let me go back to the chart. So I've entered the trade here. So this signal now is a golden cross signal. Of course, my stop loss will have to be under here. I'm sure you can set the stop loss, right? So let me not do that so that the video will not be very long. I'll set the stop loss here, and of course the take profit will have to be ×2 or ×3 of the stop loss distance. So thank you very much for staying with me to this time. This is the strategy on GAD cross, GAD, golden cross, and dead cross. Please, this is Emmanuel trade, and this is Emmanuel Odogwu. Please, if you have not subscribed to this channel, please do wait to subscribe. Also, maybe you can download the video, share it to your friends that are trading so that they can all equally learn this strategy and, of course, start making money for themselves. Thank you very much, guys. Bye for now.